Okay, so I was honestly so close to calling it a night here. Just finished filming the second video for the main channel, but we got this breaking news and I want to discuss this briefly here with you guys. Lucid Motors has confirmed they are going public in a major SPAC merger. Now, this is not a surprise to many people. This has been speculated for many weeks. Many people have been buying into the stock, has been pushing prices sky high on the SPAC, and now finally here after market close 6:18 p.m. we have confirmation that Lucid will be a public company. We're going to see this car on the road sometime later in 2021, I believe, and you will be able to own this stock if you choose to do so. Now, here's some details on the deal. The EV startup will net $4.4 billion in cash as a result. This is extremely important because, as we know from Tesla's history and NIO's history as well, this is not a cheap field to get into. Electric cars is not an easy feat. You may think it's simple because there's a lot of car companies out there, but there are many car companies that have failed over the years. There are many current car companies that are failing when it comes to EV. It requires a lot of capital, it requires a lot of investment, a lot of R&D. Lucid has proven that they are doing something right here because they've been around for a little while now. I believe maybe like 15 years, somewhere around there. Don't quote me on that, but that's the last thing I read somewhere. But anyway, the $4.4 billion is definitely going to help this business. Now, a couple more details here about the deal. They are going to become public traded on the New York Stock Exchange. They leave them $4.4 billion cash. We just read that. They are majorly owned by Saudi Arabia's sovereign wealth fund, and they plan to start shipping later this year. And then, of course, they do plan to enter the SUV market as well in 2023. You know, competition is coming. I guess 2023 is when Tesla's going to see some competition for the Model Y and Model X. Now, here's some details on the actual deal. This is the official PR publication. They are going to be merging with Churchill Capital, CCIV. That's the stock ticker symbol right now. And here's some more details on this actual transaction. CCIV and Lucid are going to be creating a transaction value of $11.75 billion. Transaction includes an approximate $2.1 billion in cash contributed by CCIV, Churchill Capital, and a $2.5 billion fully committed PIPE with an investor lockup provision that binds holders well beyond closing. So from my understanding, this just means that they will have a lockup period similar to what we've seen in other stocks like Palantir most recently. So this could be a kind of overhanging cloud on the company once it goes public. The stock is going to see some pressure because everyone's going to be waiting for that lockup period to end. So I'm not sure how I feel about that, but that's just something they say right now. The PIPE is priced at $15 per share, 50% premium to CCIV's net asset value, with an implied pro forma equity value of $24 billion. The PIPE investment anchored by Public Investment Fund account managed by BlackRock, Fidelity Research. So, I mean, you have some pretty legit names here behind this. And this transaction actually is the largest ever SPAC-related common stock PIPE. Peter Rawlinson will continue to lead Lucid as CEO and CTO. Lucid currently employs nearly 2,000 people, with 3,000 employees expected to be added in the US domestically by the end of 2022. So this is a lot of good news for people who want to, have some exposure to Lucid in the future, want to invest in the stock. However, if you've been speculating on CCIV, this may not have been the best news for you because the stock is down nearly 30% here after hours. You can see as this announcement came out, this dropped off a cliff. Refresh this here. It's at 28.66% lower now. This is because now this deal is confirmed. This is a typical buy the rumors, sell the news type of event. Everyone's been waiting for this to be officially announced. Everyone's been piling in, and now unfortunately a lot of retail investors are going to be bag holding this stock because I don't think we're going to see a recovery of to recover 28%. It's going to be up more than 30%. I don't think we're going to see that recovery anytime soon now that things are finalized and we know the terms of the deal. However, who knows? Once the stock actually converts to Lucid, we may see another rally in this. However, I'd be very careful here with this, guys. This is definitely not a investment in my opinion at this point. This is more of a speculative play at this point. If you are going to be throwing money into this, you got to be prepared to lose a good chunk of it. As you see today, we've gone from $60 at its peak to now sitting at $40, and this could trend lower tomorrow as the market opens if the broader market keeps selling off. this stock could definitely see a lot of selling pressure as well. People are going to be cashing out of this. Newer investors who got into this spec play are going to start panicking. They see 28% down. They're going to start closing off their positions, and I think, selling is going to lead to more selling. So I don't think the selling's quite done with this. I would not be surprised to see this back in the $30 to $40 range, to be honest. Remember, the pro forma calculation here, where they find, it makes sense, is around $15 per share, which was already a 50% premium to its net asset value, and at that point gave it a $24 billion market cap. So to keep all this in mind, these are all things you should understand if you were, dabbling in this stock. I know a lot of people made money on this stock, and congratulations to those who did. But if you were burnt on this here, use it as a learning lesson. These things happen in the market. If you're a new investor, these things definitely happen to you. And we've all been through this. I've been through this myself in the past when I first got into investing. I know a lot of other people have gotten into investing recently and have been burned by plays like this. So just use it as a learning lesson. Hopefully this doesn't discourage you from actually investing long term in the market. But either way, guys, hope you enjoyed this quick update video. Don't forget to invest positively, and I'll see you in the next one. Peace.